Welcome back to this channel. In this video, we are going to discuss how to analyze a chart. Understanding chart analysis is a valuable skill for investors, particularly for swing and positional trading. In this video, we'll cover the step-by-step process of chart analysis, focusing on identifying trends and examining momentum. So let's get started. The first step in chart analysis is identifying trends. A trend is the general direction in which a stock's price is moving over a period of time. There are three types of trends. First is uptrend. An uptrend occurs when a stock's price consistently forms higher high and higher lows. This indicates that the overall direction of the stock's price is upward. Second is downtrend. A downtrend is when a stock's price consistently forms lower highs and lower lows. This indicates that the overall direction of the stock's price is downward. And the third is sideways trend. In sideways trend, the stock's price moves within a range forming similar highs and similar lows. This suggests that there is no clear dominant direction in the stock's price movement. To identify trends, it's best to start by looking at broader chart, such as the monthly chart. This gives you a big picture view of the stock's price movement. Once you have identified the overall trend on the monthly chart, you can lower your time frame to weekly or daily charts. As a trader and investor, you might consider entering a long position during an uptrend, as the stock's price is showing strength and potential for further gains. During a downtrend, you may consider avoiding long positions or even consider shorting the stock, as the price is showing weakness and potential for further declines. In a sideways trend, the stock's price moves within horizontal range, forming almost similar highs and lows. During a sideways trend, it's best to stay cautious in making trading decisions. Better to avoid trading in sideways trend, as the price is not showing a clear direction. After identifying the trend, the next step is to examine momentum. Momentum is the speed and strength of a stock's price in a particular direction. Technical indicators like moving averages, relative strength index RSI, and MACD can help you assess momentum and gauge the stock's potential to continue its current trend. I personally don't use any indicators. Another important aspect of chart analysis is support and resistance levels. You have seen there are horizontal lines drawn by experts on the chart that indicate areas where the asset's price has historically struggled to move above or below. Support and resistance levels can act as potential turning points for the price, providing valuable information for traders. In summary, chart analysis is important tool for traders and also investors. By identifying trends and analyzing momentum, you can make more informed decisions. Remember, chart analysis is not foolproof method. It also has its limitations. So that's it for today's video, a step-by-step guide on how to analyze a chart, understanding trends and Momentum can greatly enhance your ability to make well informed investment decision. Thank you for watching. We will see you in the next video.